Ladies and gentlemen, welcome to Get Up with Garret. Garret is a third-generation, success-credentialed real estate entrepreneur who's here to give you tips, tricks, and share success stories. In today's show, we'll cover real estate, crypto, and the future of investing. Without further ado, Garret Bedron.
All right. What's up, Dougie?
What's up? How are you?
How you doing, brother?
Great.
You know, my arm's a little sore, not going to lie.
Yeah. What was going on?
I got my booster, my Moderna booster yesterday.
Yeah?
So I'm okay. I feel good.
Yeah, how you feeling?
Inside. So if anyone's thinking about getting their booster shot, you know, big fan of that. And definitely, I can tell you, nothing's wrong with me. My arm's a little sore, just like a flu shot. Slept great. Took a Tylenol, and you know, off I go. I'll be at work today here doing the podcast. Nothing, no reason to stay home in bed all day.
Absolutely. Keep on trucking.
Yeah. Thanks for the new introduction.
Yeah.
Excited to talk about kind of the past, present, and future of real estate. You know, I've talked a lot about doing a series of shows focused on why do people invest in commercial real estate specifically, not just real estate. You know, if we say real estate, kind of thinking owning your own home. When I say commercial real estate, I'm talking about cash flowing assets that provide a passive income for you and give you the ability to generate wealth that way. So we're going to talk about some cool things there.
Awesome.
We'll have a few shows that dive into different strategies and different metrics. But yeah, wanted to share that news, and also wanted to start talking about, you know, kind of an update on our big Hawthorne project, the hedges.
Nice.
We've come a long way. We framed the phase one of floor one. So all the lumber's up, and I know we've got a pretty cool drone video we can show everyone to give them kind of a dollhouse view. I think it's kind of like from the sky.
Absolutely.
Get a real good idea how those apartments look. So when you're ready to let that go,
we had it.
You tell me. You had it.
Why don't you tell everyone about, if they don't know about the hedges?
Yeah, absolutely.
What's going on with the hedges?
In case you haven't watched the show before, the hedges is Hawthorne's first luxury mixed-use apartment community. It's going to be 118 luxury apartments that are condo quality kitchens and bathrooms, incredible natural light. It's a health and wellness oriented project with amenities that you would expect to see in a kind of urban downtown, let's say a Montclair or Ridgewood, Hoboken. So we're talking a wine storage room. We're talking big kind of open lounge areas. We're talking about a doggy wash, of course, a gym, co-working stations. We also have a roof deck. We have great outdoor, indoor kind of living with grill stations. So it's something that the family's been working on for about 13 years. Yep, that's true. It took that long, and we're super proud of it. And we're partnered with our good friends from March Construction, and they've been hard at work. So I'm happy to kind of show you. It also has a self-storage building and a Planet Fitness gym. So lots of cool things to share with that project. You ready to roll?
Yeah, here it is.
All right, there you go. So let's see if we start this one here. There you go. Yeah, so you can really see the apartments now. Looks like we're up to the third floor on the self-storage building. And all the underground detention has been done as well, which is cool.
Nice.
Yeah, so you'll start to...
nicely done.
Thank you. Yeah, so we're getting close. I mean, they're telling me in April we'll be putting in kitchen cabinets and doing tile work and what's called the finishes. And then kind of in the May, June area, we'll be finishing up our leasing office and our models. Just got a huge bill for all the furniture and the artwork and everything that'll go into the model units, the leasing units, the outdoor space. Of course, the rooftop deck is going to be spectacular.
Nice.
Everyone loves a good
kind
of roof deck. and lots of fun surprises. I don't want to spoil everything when I want to be able to show things. And I think next week is probably Thanksgiving. So maybe after that, we'll have some renderings that we can share of the kitchen, and our website will be launching very soon too. So stay tuned for some really cool updates on the hedges. Very proud of that.
Absolutely.
You got it. Okay.
The girls are watching, by the way.
Are they?
Yes.
Which ones?
Yes. All of them. Jessica's asking if I watch now. Can I still watch tonight? Of course.
Absolutely.
So it's a perfect reminder. We are live. So if you have a question, comment, concern, you could put it in the comment section. We can answer it live. So that's the benefit of watching live with us, but you can always watch later on. Once we go live and once it's up. So you can always watch past episodes as well.
Of course. And all those past episodes are forever in the YouTube universe and vault, and you can watch them as many times as you want. And Juliet always says to me, Dad, don't forget to give it a thumbs up on YouTube and subscribe down here, right? That's what the kids do.
Absolutely.
And if someone has a question later, they can always email the show. That's doable too. We've got an email, getupwithgarret@gmail.com. So feel free to drop us a note, a text, a tweet, whatever works for you. You'll find us and we'll find you. So Doug, you've been a real big kind of crypto guy.
Yeah.
I know you've bought Ethereum. You've been all about Bitcoin. I've dabbled in it a little bit, kind of learning about the future. But, huge news came out this week, just a couple of days ago. The Staples Center, effective Christmas Day, will now become the Crypto.com Arena. And it's in the largest naming rights deal in history in professional sports, right? Again, my background, for those of you that don't know, is also professional sports. Before real estate, I worked for 3 professional teams: the New Jersey Nets, the Pittsburgh Pirates, and of course, the Golden State Warriors. And last couple nights ago, the Warriors beat up on the Nets. So that was a tough one for me, but it was great. I was pulling for the Warriors. I was super excited. So big news. Not only dollar-wise, $700 million, right? Which is just kind of a unthinkable dollar amount, right? Some of these arenas don't even cost that to build. And the Lakers just re-signed a 20-year lease at the arena, the Crypto.com Arena. So what do you think about that? I mean, has it arrived mainstream now?
Absolutely. And I think that's cheap advertising right there. $35 million a year. A Super Bowl commercial is $7 million. Just to put things in perspective, because you get a Super Bowl commercial 30 seconds during the Super Bowl. This is going to be talked about who plays there? The Lakers,
the
Kings. You have a lot of events. I think there's award shows that go there. I think I did the Emmys there.
I think the Grammys were there like 19 times or something. Or in the Emmys, sure.
And it's we're all used to seeing and hearing here at the Staples Arena. You know what I mean?
Staples Center, yeah. Well, it's funny. The Clippers are actually leaving. For those of you that don't know, Steve Ballmer is building a $1.2 billion arena, I think in Inglewood, California, with an I, which is going to be the new home of the LA Clippers. So Staples used to have Clippers and Lakers, obviously twice the amount of games. But look, if the Lakers were to win one more championship, the value of that, having Crypto.com tied to that, the parade, everything, has got to be worth, I would think, $100 million just on that.
Yeah.
So let's see what happens. The Lakers have been one of the storied NBA franchises and also all professional sports. And I think it's super exciting.
Yeah.
Who's that?
That's Dan. Dan commented from LinkedIn. Great points compared to the Super Bowl ads. Well, thank you, Dan.
Thanks. I appreciate that.
Marketing is always on my brain, but but that's what you have to compare it to. Like for me, $7 million a Super Bowl commercial is it's overwhelming.
It's not in the budget for
it's not in the budget for me, but for a nationwide company, $35 million a year. And that's a lot. That's every sporting event. That's every, that's not just one Super Bowl commercial, which is $7 million. You know what I mean? That's
exactly. Plus, it's every single day. It's some type of mention every single day, right? So there's got to be a value. If you break it down per month, per week, per day, the value of that mention is probably very, very strong. And
it's taking something that people don't really understand yet and putting it mainstream. Right now, people are, do I want to get into cryptocurrency? Do I want Ethereum? I hear all this stuff about it. Now you're in the mainstream, it's credibility.
It's funny though. I'll be honest with you. So I certainly know about Coinbase, and I certainly know about the Cash App and Bitcoin, Ethereum, and we're going to talk about some other thing. I actually never even heard of Crypto.com. partially like, is that pets.com, which was a huge disaster, or
Yeah.
is it a real company that has infrastructure and has a business plan?
It's a real thing. I have it. The reason why I have it is because there's some currencies that aren't on Coinbase. There's some things that aren't on Robinhood. There's some things that aren't on crypto. So you have to have these different wallets and these different apps, because if you want access to the latest and greatest coin, it might not be on Coinbase. Coinbase gets them all once they're popular. But if you want to get in really low, like Dogecoin, you want to get on really low. Dogecoin wasn't on Coinbase at first. You had to go through crypto.com or Robinhood first to get it. So like you got to be on all these different platforms. So that's one of the bigger platforms, crypto.com, Coinbase. Yeah. Unfortunately, we're in the Wild West right now. Real quick comparison. Google, Ask Jeeves, Yahoo.
Sure.
There was a fight for who was going to win the search engine optimization, right? Google won.
Of course.
Right?
It wasn't even close.
Yeah. That's what we're in right now. We have an Ask Jeeves, we have a Yahoo, we have Google. So it's the same kind of thing.
All right. So let's tie that together back to kind of real estate, commercial real estate, right? So if you wanted to buy a piece of real estate, Doug, and you didn't have the funds to purchase it, maybe it was $1 million shopping center or $1 million fourplex apartment complex, and you couldn't raise that money, you didn't have that money, you would have no way to buy that property. So things are changing. Okay, things are changing, and what Doug's talking about with the Wild Wild West is now starting to happen in commercial real estate. So I want to feature a company that I recently got involved with in terms of making a purchase and a new website. It's called Lofty.ai. And this is something that you definitely want to read up about, and you want to do your homework and do your due diligence, okay? If you decide to get involved in something like this. But this is now one of the first companies out there that is allowing you to buy a very small sliver, as little as $50 of a cash flowing asset that can go up in value potentially, right? Can also pay you monthly rental income. So for example, what they're doing is they're taking, so is that live?
Yes.
So these are houses that are available in Chicago and Cleveland and St. Louis. They're using AI technology to figure out where the highly likely that rent growth will continue to move rapidly, right? And so they're going to get in undervalued, they're going to get tenants, and they're going to raise the rents, and a higher rent means an appreciation on the property. So they're using data and AI. For example, some of the data points may be, well, there's a great new school down the street. There's an awesome coffee shop. There's a library. And we noticed that, that library is more active than other libraries. So there's this whole new world of analytics that's going to be applied to real estate investing. And I'm telling you, this is like mind-blown emoji. We are totally scraping the surface here.
Oh, yeah.
And this is very early.
We have a new one launching in 4 hours. Jump on that one, baby.
4 hours. So basically what's going on here is you're not allowed to take a piece of real estate and make it a token. That's not legal. It's not legal yet. However, what they're doing is a partnership is being created, right? It was called an LLC. And by the way, we do LLCs when we buy real estate for our investors, and each person in the LLC owns 10%, right? Or a portion. So let's say, it's $1 million and everybody invests $100,000. That means they're a 10% owner, right? Of that LLC. What Lofty.ai is doing is they're taking the million, let's just say it's $100,000. And they're carving it up into tokens, not the real estate. The actual partnership is tokenized because it's illegal to do real estate, but they're tokenizing the partnership interest. So now I can go on and buy a $50 token, right? And then they send you to your wallet, and there's a lot of different wallets you can research and learn about. They use the Algorand wallet, I think it's called. So basically you make this $50 investment and you're now a 0.000, whatever it is. It's a slice of the pie. No different than what's happened in Robinhood, where you can buy a $50 slice of Tesla, which is $1,000 stock, right? So maybe you can't afford $1,000 stock of one share of Tesla, but you can afford $50. So this, in my opinion, is one of the big game changer alerts in the future of commercial real estate, because it takes a liquid asset and immediately becomes liquid. I'm sorry, it takes an illiquid asset and immediately becomes liquid, right?
I got a couple questions for you.
Here we go. Hit me up.
Because I'm going to be for the people out there that don't know.
Yeah, no,
I'm asking for them, right?
I'm still learning. I mean, this is so new. I'm still learning about it on the go.
So it's illegal to put a real estate property on as crypto as a token, right?
Exactly. That's still illegal.
That's still illegal. But you're now you're selling partnership, right? So now this is a rental property.
That's right.
The profits that they get from the rental property gets divided up for the people who own the tokens.
That's right.
So let's just say rent is $2,000 a month.
That's right.
It's now split divided by 10 people who own these tokens.
Sure.
So it's just kind of like a workaround of owning the property.
Yes, you're not on title. Okay, so it doesn't say anywhere Garret Bedrin is on title of this property.
Gotcha.
But it says that Cleveland 1812 First Street is Cleveland 1812. I'm making this up, but Cleveland 1812 First Street LLC is on title. So the partnership,
and you're you bought yourself into the LLC that owns that property.
Exactly. And what the future here, guys and girls, is that token can now quickly be traded blindly on a secondary market. The secondary market doesn't exist yet.
Yeah.
Okay. We are early here.
Yeah.
You can't even sell it yet. Okay. If I want to sell this $50, I gotta sell it back to them.
Yeah.
But what, and shout out to my friend Max who's one of the founders of this company who kind of helped explain this to me and helped me make my first investment. Again, you've got to do your own homework here. You got to do your own research. Okay. Because these are risky investments. However, there's no doubt that over the next 10 years, this is going to monumentally change commercial real estate. And the reason why is because the minute you open up to a new audience, Doug, it drives values up. So if Tesla can only be bought by the top 1% people out there because it's $1,000 a share, now you bring in 1 million other people who can afford it at $50 a share. What's it going to do? It's going to raise values, right? Creates competition, creates interest. Rising tide raises all ships, like my Uncle Paul always says. So I'm just blown away by this. I knew this was coming, but now that you can actually play with it and try it out.
Yeah.
So head over to lofty.ai, read about it. Let me know what your thoughts are, what your concerns are. Shoot me a note. I'd love to talk a little bit more offline on this. And, I'd love to learn more about getting involved with tech companies that are going to be doing this in the future, because this is definitely the future.
Yes. And this is just the beginning. This is going to revolutionize real estate. It already started with music. You don't need a record label anymore. Some guy put out his album, 1,000 copies of his album, sold it for $1. He made $1 million in 15 seconds or something. And now those people who own that digital album can sell that album and he gets royalties from those sales. So the NFTs and all this blockchain is really going to change a lot of things.
This is basically an NFT for real estate.
Yeah,
absolutely,
100%.
Except it's better in my opinion because it is backed by a real asset that creates monthly income. I'm going to get $1 sent to me at some point on my $50.
Yeah, this is a no-brainer. I'm going to buy up this whole block right here.
That's awesome.
And this is such an early thing. Like going back to the crypto. If you sprinkle things out, like I bought a couple of Ethereum when it was cheap. I bought Dogecoin when it was 0.00 fractions of pennies. And like, if you sprinkle things around and one of them hits, one of them makes some money, it pays for all your little investments. So if you're smart and do your research and kind of diversify.
You have to diversify. Yeah. Definitely. You have to diversify. You don't go all in on anything.
Yeah.
My kids are up 60% on Roblox. I've been buying them Roblox stock over the past 6 months because they're playing that game nonstop during the pandemic. So hopefully we can pay for a trip to Disney World next year with that money.
Yeah.
So cool. So I wanted to, introduce this company and this opportunity to my audience. And I want to kind of tie it to what have been the past and present of real estate investing. So I want to ask you, Dougie, think about all the things that you've learned from me about investing in commercial real estate and all the big companies out there. There's probably 10 reasons that people love investing in commercial real estate. And there's no right or wrong, which one's more important. Every family is different. But think about one or two that you would think would be in the top. What do you think?
Being your own boss, moving away from being an employee and being an owner, longevity, having an asset that, people are always going to have to live or have a location to shop. Like they're always going to have to be a place to live, right?
Sure. A physical, right? You don't sleep
place.
outside.
Yeah. People are always gonna have to live somewhere, right?
That's true.
So it's longevity investment. It's that people want to move think long term and think about retiring and getting out of their job by still getting an income from a piece of property. Those would be the big ones.
Cool. So what about paying taxes? How do you feel about paying taxes?
There's a great quote. It's not about how much you make, it's how much you keep. So if you know how to work the system and you know how the ins and outs of taxing, that I'm sure there's benefits from owning a property and renting it. Then just owning a business, by owning a business, I think there's tax incentives to own a business because you're employing employees. I think, or correct me if I'm wrong, like employees get taxed a little bit more because the owner is giving the employees jobs.
Absolutely. There's a number of things, depreciation,
Yeah.
of assets. So one of the top reasons, and I'm not necessarily putting this as number one or two. I'm just going to kind of share some of the top reasons because based on where you are in your tax rate and based on where you are in kind of your real estate strategy, some of these could change in terms of how important they are, Doug. But the one that I want to introduce to everyone today, and I want to introduce to you specifically, is called the 1031 exchange. Okay. Very simple. 1031 exchange is from the 1920s. Okay. Early 1920s. And it's basically 1031 is the code, what they call the IRC, Internal Revenue Code. The IRS is the Internal Revenue Service that I guess manages and administrates the code. But 1031, code 1031, this is a real code. You can go to irs.gov and bring up a 2 or 3 page white paper on this. This is one of the top secrets that people don't know about before they invest in commercial real estate. And what this does is it allows you to sell a commercial real estate asset. Could be a shopping center, an office building, an apartment complex. And by the way, it's more, I'm going to talk about commercial real estate. They do allow you to do this with certain businesses as well. I'm going to focus on what my experience is. And you can sell it, and the gain on that property can be tax deferred.
Okay.
And eventually, perhaps, totally written off. And I'll explain why.
Please.
Okay. So how would you like the fact that if I said to you, Doug, you can buy $1 million apartment complex.
Okay.
You're going to manage it. You're going to add value. You're going to get rental income, all the wonderful things that everyone loves about real estate.
Yeah.
And in 10 years, someone's going to offer you $5 million, right? So the profit is $4 million. Well, you've held it for longer than a year. So you're going to have a pretty big tax bill, capital gains tax, anywhere from probably 15 to 25%. And this could totally change. Biden could totally change this next year, right? Absolutely. So instead of paying that tax bill, if you go out to the market and you buy another piece of real estate that is what's called like kind. Now that's pretty wide, like kind. Okay. Yeah. You can sell an office building and buy an apartment complex. You can sell an apartment complex and buy a warehouse.
This one, the sky is blue above the building, and so is this building. The sky is blue above the building.
That's exactly what you tell the IRS. If you do that, and there's certain rules that we're going to get into, and some I'm not going to get into and ask you to talk to your tax and legal experts. I'm just going to talk kind of general terms to be safe. But basically, they allow you to defer the taxes if you buy another property for the same price or more. Okay. So you bought a property for $1 million, you sold it for $5 million, right?
Yeah.
Instead of paying tax on $4 million, which could be $800,000, it could be $1 million, right? Gone. You go out and buy another property for $5 million, $6 million, right? And you pay no taxes. You defer your taxes. Doug Friedman, how does that sound?
That sounds awesome. So let me just get this straight. So I have property one for $5 million.
No, 1 million you started at.
I bought it for $1 million.
Yep.
4 years later, now it costs $5 million.
It's worth $5 million.
It's worth $5 million. At the same time, I'm going to buy property two at $5 million. So I can buy my next project, right?
Yep.
And I could sell the first project, make my $4 million income, and now I can profit. Yep. My profit, excuse me. And now I have property two.
Yep.
And now I can buy property three and do the same thing that I did with the first one.
Absolutely.
And just keep moving.
Keep rolling.
Woo.
And wait.
There's more?
Just wait, folks. There's more. If you subscribe now and give me a thumbs up on YouTube.
Nice.
There's more. And again, this is getting into the minutia a little bit. So this is just a global comment. You got to talk to your tax prep and your legal prep folks. When you die, which I hope never happens soon.
Thank you.
When you die, you can then transfer this asset to your heirs, and it gets what's called a stepped up basis. Stepped up basis is a fancy word for they market to the fair market value when you die.
Okay.
So let's say you buy it for $1 million.
Mm-hmm.
Okay. And now you sell it for $5 million, right?
Mm-hmm.
So you've deferred tax on that $4 million.
Mm-hmm.
If you then die 5 years later, your heirs now get this property, and it's written down, it's stepped up to $5 million. Well, maybe it's worth $5.5 million.
Mm-hmm.
So they would only pay tax on the difference between the 5.5 and the 5. Okay.
Okay.
So that's incredible.
Yeah.
So you buy an asset just to recoup, and we're going to watch a little video on this, but you buy an asset for $1 million.
Yeah.
You sell it for $5 million.
Mm-hmm.
Okay. If you then die,
Mm-hmm.
your heirs will get that, okay, through your will or however it is you do it, estate, this and that. Now, there may be estate taxes, et cetera, but you're allowed to step up the basis to the fair market value. So if it's worth $5.5 million, you sold it for $5 million, you're only going to be taxed on that $500,000
Wow.
versus the $4 million. Are you kidding me?
Yeah.
Where's my mind blown emoji, guys? This is nuts.
So based on what you're saying, is this to encourage people to continue growing their real, like, right? Because they want you to buy, buy another property. You want to sell the first
and
one,
improve it.
Yes,
that's the key. So, can I give you a heads up to bring up this?
Yeah, I'm ready.
There's like a short little 1 minute and a half video. If you're watching at home on the audio only, I apologize you can't see this, but if you're watching on YouTube and can see the video, I think you'll really learn a lot from this, and then we'll pop back and we'll talk more about it. Just tell me when the ad's
When
done.
you sell a piece of real estate, the value of which has appreciated over time, you have to pay a lot of taxes. After all, you can't really fully benefit from your real estate investment without paying taxes, can you? Actually, you can. Back in 1921, Congress concluded that an investor simply switching from one property to another was only continuing the same investment and should not incur a taxable event. They called this a 1031 like-kind exchange. So when you sell a piece of real estate and purchase a new one of at least equal value, you can defer tax payments. The key? Follow the regulations. First, choose a qualified intermediary or QI such as Accruit to process the exchange of properties. Next, transfer the property you're relinquishing through the QI to the buyer. The QI holds the funds on your behalf from the time of sale to the time of purchase. Within 45 days, settle on possible new properties. And within 180 days, close on the replacement property, which the QI acquires with the money held from the initial sale. The new property is transferred through the QI to you, the investor, completing the tax-deferred exchange between you and the QI. When you partner with a trustworthy and experienced QI, 1031 exchanges allow you to defer taxes that can otherwise eat up to a third of your profit. To speak to the leader in 1031 exchanges, contact Accruit today.
Cool.
Nice.
All right, so Accruit is a big company. Again, you'll make your own decisions, but they're an intermediary. So I want to explain what that all is about too. So let's kind of break it down. Let's go through the top 5 or 6 kind of rules here, just kind of globally. Okay.
Mm-hmm.
So we talked about number 1, the property's got to be like kind. Okay.
Mm-hmm.
And again, there is business that can be done with this. I just don't want to focus on business because I've never done that before.
Mm-hmm.
We've done probably 4 or 5 1031s. Over the past 15 years or so that have worked on real estate. So I've never done it with Salons by JC or business. So I'm not an expert on that. I don't want to talk about that.
Yeah.
So like kind, and the IRS is pretty broad on this, right? Like, again, it could be farmland that makes money. It could be some vacant land. It could be an apartment for an office, a self-storage for a shopping center. So it's pretty broad. It's not like kind is not fourplex for fourplex at all. Okay. Any questions on that?
Yes. So, well, not on the like kind, but first things first, you said this is something you want to do when purchasing, right? You want to implement this at the beginning of your journey.
No.
Okay.
You don't have to. There's nothing to do if tomorrow you go buy a fourplex, and it's $300,000, you've got this great opportunity, just buy it. You don't have to do anything.
Okay.
No.
I could later on when I'm thinking to sell, I can implement this.
Yes,
exactly. It's like a cheat code: up, down, left, right, up, right.
Absolutely. Okay. That's it for you right now? Okay, cool. So you can't do it outside the US. So I once looked at a beautiful villa in Turks and Caicos. I think it was like $11 million.
Wow.
And it was 15 bedrooms, and it was this incredible asset. that I thought we could raise money and run as a private kind of wedding, rental, exactly,
Yeah.
holiday villa. The problem is I wanted a 1031 into it, and you couldn't do that because that's outside the U.S. So that's
Gotcha.
that's a no. Okay? All right. So that's one of the rules. So now, number 2, it says here, property must be for productive use in trade or business. So again, it's not a personal thing. So you couldn't sell your primary residence or your vacation home. Okay, that wouldn't work. That's not a 1031. That's got to be for business purposes, cash flow, for revenue and expenses. So let's say you happen to own a beautiful house. Where do you like to go? Down the shore? Do you go to LBI?
Yeah, absolutely.
Okay.
I'm a Manasquan boy.
Manasquan. So
Yeah.
Dougie goes to Manasquan. Let us know in the comments where you like to go on vacation. And Dougie goes to Manasquan, and he bought a $100,000 condo. Oceanfront, went nuts.
Yeah.
Now this thing's worth $1 million. That is not a 1031. However, if you wanted it to be a 1031, you could rent it out for probably 2 years. Again, Dougie, talk to your tax expert on this. Don't just tell him Garrett said to do it. But if you were to make it a rental property where you didn't use it for your personal residence or your vacation residence, a rental property certainly would qualify for a 1031.
Nice.
So can't be your personal property. So that's kind of number 2. Okay. Number 3, the replacement property, Doug. So the second property must be equal or higher in value to the relinquished property, right? So you sell it for $5 million, you bought it for $1 million, sell it for $5 million. You got to go spend at least 5. Okay. You can't spend 2. You got to spend 5.
Gotcha.
Okay. Now, if for some reason you did it and you only bought it for 4, the next one, you would still have some of the 1031, but there would be some taxable piece. They call that boot.
Okay.
For a sneakerhead. I don't know.
Nice.
They call it boot.
Nice.
And you'd be taxed on the boot. Okay. So again, you'd want to dive into that more with your tax professional. Now, you have to use what's called a QI, a qualified intermediary. That's a fancy word. Say that 3 times fast,
No,
Dougie.
thanks.
I know you don't want to do that one. And so it's basically a third-party company, kind of a way to generate a fee, right?
Okay.
And it could be a lawyer. There's certain companies that can do this where basically they hold the funds. Okay. So you buy the property for $1 million, you sell it for $5 million. And now that $5 million does not go to you. You don't get to put that in your pocket.
Okay.
It has to go to this third party, like a title company,
Yeah.
a third party QI firm, and they hold it in escrow until you buy your new property. If you touch the money, you're done.
Okay.
You're done.
That was going to be my next question, is that there a time frame, because you're buying a property, you're selling a property and then buying a property. Is there a time frame you have to buy the second property? And you just answered, you don't touch the money, it goes in. So basically you're using the money that the house or the place the property that you sold, you're using that money to buy the next one.
100%. And furthermore, I want to add to that, Doug, you can't change the name of the company. So if, Undefeated Media LLC buys this apartment complex for $1 million and then sells it for $5 million, Undefeated Media LLC has to be the same exact company that buys the next one. Okay. So you can't be like, oh, now I'm buying it as, John Smith LLC.
Gotcha. Now does the property, so let's just say I buy an apartment complex, I call it the complex, I sell it, the next property that I buy has to be called the complex?
No, the name in terms of like DBA, like a marketing, that doesn't mean anything.
Right.
Nobody cares about that.
Cool.
You can call it whatever you want to call it. But the actual LLC name that signs all the docs has to be the same.
Gotcha.
Same company. Gotcha. Yep. Okay. That's critical.
Yeah.
Now, there are some rules. Let's talk about kind of the time frame, which is perfect. Good, great question.
Yeah.
So, and again, this gets complicated. And as long as you just keep good records and you give this stuff to your accountant, your lawyer, your QI, you're going to be fine. Again, we've done this many times, and millions of people, have done this very successfully. You have 45 days to identify what your replacement property or properties will be. So if you sell January 1st, by February 15th, you need to let the QI or the accountant know, on paper, in writing, hey, I've identified these 3 properties as potential purchases to satisfy my 1031 like-kind exchange. You have to do it.
Yeah.
That's the rule. The second rule, there's only 2. I mean, there's a bunch of rules, but there's like 2 that are super important that are not touchable. 180 days to close. You must close on the second property within 180 days
Wow.
of when you closed on the selling of the first property.
Yeah. So
Does
you
that
gotta
make
have, you gotta
sense?
be planning this before you even start to think about selling.
Yes, that's where you're going earlier. You don't have to plan this when you buy,
Yes.
but before you start selling, you better be thinking about where am I replacing it with.
Yep. Got it.
That's crucial.
Yeah.
You will screw this whole thing up.
Yeah. And
if you
180
don't.
days in real estate world is very short, right?
6 months is short. Yeah, 100%. And now these dates run, not sure what the word is, maybe concurrently.
Mm-hmm.
And if I'm wrong, let me know in the comments. But basically, the 45-day starts. So let's say you sell your property January 1st.
Mm-hmm.
That 45-day starts right there. And the 180 starts also. So they're kind of running like this.
Yeah.
It's not, think of it like prison sentences, right? You're not, if you have 3 sentences, you're not like serving one, then starting the second, then starting the third.
Gotcha.
They're kind of running at the same time. I think that's concurrently. I pretty much, I know I did second grade twice, everybody, just so you know. So I'm not sure what that word is, but I think that's the definition. Now, you don't have to just identify one property. You can identify a whole bunch of properties, and there's certain rules about percentile of the value. I don't want to get into the minutia,
Mm-hmm.
but the general concept is you're going to identify 3 properties that could work. Okay. And then you got to bust your tush to close those properties. Okay. Let me think what else. Okay. So that's kind of the overall kind of layout of how 1031 works.
Mm-hmm.
Now let's talk about why do people love 1031, right? Well, the obvious reason is if you add a lot of value and you make a tremendous gain,
Mm-hmm.
you'll be diluted if you pay taxes. Now, capital gains taxes typically is less than what you would have regular earned income taxes, right? So if you have a big high paying job at Google or Facebook, and you're making $1 million a year, and you live in California, you may be handing over close to 50% of your taxes.
Mm-hmm.
Capital gains may be, 15 to 25, which is a lot less. So sometimes you'll hear in the news, somebody got a very small salary, but they got this tremendous, stock option or this tremendous what's called carried interest or whatever,
Mm-hmm.
because capital gains is a different tax because the government wants you to reinvest and they want you to open business and make your real estate better.
Mm-hmm.
So obviously people love this to save money and continue to invest. They also love it as diversification, right? You could
Mhm.
sell an asset for $5 million. You could go buy 2 or 3 properties with that. You don't have to buy one. You can spread it out.
Interesting.
Yeah. And so maybe you buy, diversification means could be an apartment complex in Charlotte, North Carolina,
Mhm.
and it could be a self-storage unit, in Greensboro, North Carolina.
Uh-huh.
You're diversifying on your market and you're diversifying on your property type, which is really, really important.
Yeah, that's huge. So you have the first property is $5 million, and as long as this second 3 properties equal $5 million, it counts.
So the first property was 1 million, right? You bought
Yep.
it for 1, you
Yes.
sold it for 5.
Yes.
And now when you sell that, you can go out and buy 2 more, one at 2.5 and one at
Yeah.
2.5. No problem.
How about 3?
Well, yeah, you can pay more. Dougie, you can always pay more.
All right, nice.
Nobody ever complains about that. So, people love this. And here's what you have to remember. The property that you buy,
Yeah.
right, that replacement property,
Mhm.
that may be worth even more than the first one ever would be worth, right? For example, let's say you sold the property and it was 100% lease, which is why you got $5 million. But the next $5 million property you bought was only 50% leased. Well, if you hire a broker and you really roll up your sleeves and you make improvements, maybe in 3 years, that $5 million property is now worth 10, where the first one was never going to get to 10.
Gotcha.
Like it maxed out at
Yeah.
5, right? So that's pretty cool that you
Yeah.
now can play in a bigger property that may have more added value, more appreciation, more cash flow.
Mm-hmm.
And again, you're never taxed on that initial gain unless you sell. Now, I want to make that clear. You bought a property for $1 million, you sold it for $5 million, right? You then went and did the 1031 and you bought the next round, right?
Yeah.
If you decide to sell it a year later, you will get taxed
Mhm.
on that gain. You
Yes.
do. Okay. So
Yes.
you're deferring your tax. You're not eliminating it.
Gotcha.
However,
So at
if
the end
you-
of the day, it's the like you're just saying, I'll be taxed later. I'll be taxed later for every single transaction.
Yes. And the reason why is because as you get older, right, it may be that you're in a lower tax bracket because you have
Yeah.
less earned income.
Mhm.
Or if you, God forbid, die, it gets passed on to your heirs and it gets stepped up to the fair market value. So the tax is very minimal.
Mhm.
I mean, that's just
Interesting.
like amazing.
Well, yeah. I mean, you could just consistently, as long as you're owning property, consistently just push your taxes.
A lot of
back and
people
back
do
and
that.
back.
And so sometimes you'll hear this idea of, oh, the 1%, they don't pay enough taxes. They never pay taxes. Well, in some ways it's true, but also in many ways it's legal, and you can do it too.
Yeah.
No one says you can't do it.
Yeah, that's a common thing, is like people always get frustrated or angry. Well, you can do it too. You read a book, figure it out.
Absolutely. And I'm not sure how Lofty and those types of other companies are going to work with 1031. I don't know if they can do that because there's so many different investors in the deal. But again, if you're upset about somebody else having the opportunity to buy into real estate, I think the future's coming for you, where just like you can buy a small slice of Tesla for $100, you'll be able to do that with a shopping center or an apartment complex.
I'm about to buy a whole block. You have no idea.
So tell me, what questions do you have, Dougie? I know I just laid down a lot for you.
I mean,
your mind's going a million miles.
Oh, a million miles an hour right now. I'm not at the point to buy a $5 million property, but the $50 investment for real estate is very interesting. Do you know what? So like just for easy math, if I buy a token for $50, are you looking at a dividend of like $2 or $3 a month?
Okay, so do you want to bring back the Lofty website?
Sure,
I can show you.
Absolutely.
I think it had it on the when it was showing some of those properties at the bottom. It was talking about the metrics. So there's two metrics. One is called cash on cash.
Okay, so that's the 7.5% cash on cash.
Can the audience see that?
Yes.
Okay. So this project here is 7.5% cash on cash.
Okay.
So
7.5% of my $50 I will get per month,
per year,
or per year.
That's
okay.
per year.
All
That's
right.
per year. Okay.
Okay.
So typically, like the stock market used to return, 7% per year, let's say.
Okay.
So, we don't buy a piece of real estate, our family, unless it's going to make about 10% a year. You invest $1 million, you want it to make $100,000 per year out of the gate. And obviously you want that to go up to, 120,000, 150,000.
Okay.
And, as high as you can get, of course, right?
So off my $50, let's just for easy math here.
You got your calculator,
Yes,
Dougie?
I do. For easy math here, the 7.5% cash on cash per the year, $50 would yield you $3.50 for the year.
Okay. Now,
right?
that doesn't sound like a lot of money.
Yeah, but you're also not losing the $50 because you can sell the $50 at an increased rate because property is going to go up.
And so that's what's called the IRR. If you want to go back to the
Yes,
website.
Sir.
Okay, so let's go back to the website.
IRR 18.5%.
Okay, so IRR is a very complicated calculation.
Yes.
Don't use a calculator. It's more of like a Excel spreadsheet kind of sum, one of those formulas. And basically, IRR calculates the return that you got each year, right? That 7.5.
Yeah.
Plus, it calculates the appreciation, right? And you bought it for 100K. Now it's worth 150K.
Yeah.
So there's a 50K pop there. And then the last thing it adds in is repaying your debt, because every month you're paying down the mortgage.
Yes.
And then it kind of calculates, all right, you did it in 2 years or 3 years. What's that really worth kind of per year if you averaged it? It's a little more complicated than that, but I'm trying to make it very simple. So basically what Lofty is saying, based on market data, we think we're going to buy it at this. We think rents are going to be 7.5%, and we think we're going to sell it at an increase. And at the end of the day, when we sell this house, it will be as if you made, what does that say? 18? I can't read it.
18.5 IRR.
Okay. So it'll be as if you did 18.5% a year. So I don't know what 18.5% is on $50. My friend Brandon probably knows what it is on his head, but figure out what 18.
$9.25.
Okay. So basically what they're saying is at the end of the day, after you sell and repay everything, you would have made $9.25 per year. Okay. On your 50.
That's if you sold the coin.
No, that's if they sold the house.
Okay. If they sold the house, they're estimating you would make 18% off your investment, which is $9.25. Here's something interesting. Two episodes ago, I said, what's an easy way for someone to start getting into the game?
Yeah.
I think this is an easy way to start getting in the game. And I think it's a nice way for someone who's got some disposable cash that instead of sitting in a bank account, which you don't make interest anymore in a bank account, correct? Right? If I put my money in a savings account, you're not making 7.5%.
Correct.
So this is an easy way to take disposable cash, buy it, own an asset, and for every, you could buy $200 worth instead of $50 worth, and now you're making $10 a year on your investment.
Absolutely. I mean, look, every investment has its set of risks, and you have to weigh your whole portfolio, right? So you should never put all your eggs in one basket, whether it's location, property type, investment strategy. You know, I invest in a lot of different things.
Yeah.
But this is a way, and obviously $50, you know, is kind of the starting number. I don't think anyone's super excited about making $3 a year, right? But the reality is if that were, you know, $10,000,
Yes.
or that was $100,000, you know, where could you replace that return with the safety of owning real estate and the benefit that if it goes up in value, you can play in that. That's upside.
Oh yeah.
That's gravy.
It's way better than having it sit in a savings account that you make no money off of.
Like if you're in a savings account and you make, let's say, 0.25% or 0.5%,
Yeah.
here you're going to make 7.5%. And guess what? You may make 18. You may make 15, but you may make 21.
Yeah.
So I think that's what's really attractive. And look, this is not tremendously different. Like when I put an offering out there and I talk to accredited investors that want to grow their family wealth with our family, you know, they're investing maybe $100,000 and they're owning 10% of a shopping center. Well, that's illiquid. They can't just sell that tomorrow. They're in the deal for the long run. Here, you can get in and out of this thing if there's a secondary market with your token. So it really provides you an opportunity that you've never had before. And again, this is risky. It's a startup. This company is brand new, and there'll be many others that come and go and fail, et cetera. But I'm telling you right now, you heard it here on Get Up with Garrett. This is the future.
Yes.
And that's why you got up today to hear that.
Absolutely. That's it. That's big. That is big. That is great information, Garrett.
You got it, buddy. So I want to transition maybe just to finish up the show with our football picks.
Yeah.
You have time to do that?
Absolutely.
A couple minutes left. So last week we did not do so well. I'm sorry to say. I think we went 1 for 3. The Chiefs did spank the Raiders, which was great. You know, I think the Chiefs are rising again. I think they figured out their hustle.
They snuck into first place. So
did they? That was quick.
Yeah.
And you know, so the other 2 games we were off on. So hopefully you did not bet with the Get Up with Garrett show. But this week you can. You can. Yeah. You can. So I got
fresh week,
fresh start, as they say. Got 3 picks for you, Dougie.
All right.
Let's start with Aaron Rodgers is back post-COVID. He feels good with the Green Bay Packers. They are giving 2.5 points on the road to their rivals, the Minnesota Vikings. Okay.
Ooh, the Vikings been sneaky, but Green Bay, I think Green Bay has the best defense in the league right now. So I'm going to go with Green Bay.
Okay, we're both going Green Bay. I'm writing this down. It's only 2.5, and I feel like if Green Bay is going to win, it's going to be by a touchdown.
Yeah.
Okay. Now, next one is the Miami Dolphins. You've got them giving 3 points, and they are coming up to MetLife to play the Jets, who had just a horrible. I'm so glad we're stopping talking about Mike White. This is just exhausting. I mean, it was Craig Card, everyone on the fan, they just all got it wrong, totally wrong. Okay.
Did you watch the game?
Yeah.
Okay, so I missed the game. So
4 interceptions.
Okay.
Looked horrible.
Right. But so he just but like, I mean, okay, fine. But like, did he look like he's not gonna? That was his shot and he blew it.
Yes.
So Zach Wilson's back in the mix.
No, Joe Flacco's back.
Okay.
Okay, Joe Flacco. That's all you need to know. Joe Flacco. Okay.
It was that bad.
It's that bad because if
Joe
you
Flacco's
thought
a good quarterback, but he's not. His time is up. His time is up.
I think it's clear the Jets season is over. But if you had any hope and thought that Mike White was something of a valuable piece that you could trade, or maybe trade Zach Wilson, you'd keep letting him play, get the experience. No, he's done. It's over. It's done.
So did they put Flacco in at the end of the game? Or
did they bench Mike White at the end, or did he get hurt? I'm not sure exactly.
So you're writing him off because I was the first showing. I was all about like, see you later, Zach. Like that was way better performance than any of Zach's games.
No, it's done. I had 2 TVs going. My buddy Neil came over. We had Red Zone in my outdoor room, and then we had the indoors with the Jet game.
Nice.
So okay, so Dolphins giving 3 at the Jets in MetLife. I'm taking Miami. How do you feel?
They're giving 3 to the Jets.
And the
Joe
Jets
Flacco.
Yep.
I'll go Jets on this one. I'll go against you on that one.
You got it. You got it. Next one, last game here. We have the Cincinnati Bengals, who've been kind of hard to figure out.
Yeah.
Had some surprising losses and some good wins.
Yeah.
They're giving 1 point, and they're going on the road to Las Vegas to see the Raiders.
They're giving 1 point to the Raiders?
No, sorry.
They're getting 1 point.
That's correct. It's Bengals. You know what? I wrote down Bengals -1 at the Raiders. I better double check.
Well,
that.
either way, it's basically a pick 'em. 1
Exactly.
point. It's a pick 'em. So I'm liking the Raiders. They have a couple hiccups, but I think they have potential. I'm going Raiders.
Okay, cool. So I like the Raiders too. I think I think they had two tough games. They lost to the Giants. They lost to the Chiefs. Obviously, they had the horrible DUI and the coach. But at some point, they're going to get it back together because they do have a lot of talent.
Yeah.
And I don't think it's likely they're going to lose 3 games in a row, especially when the game is going to be at home. So yeah, it looks like here it's the Raiders getting 1 point at home. Yep, it's the Bengals -1 at the Raiders. So I'm going to go with the Raiders getting that 1 home point.
I like it.
And what'd you say?
I'm with you, Raiders.
We're together? Okay.
So the one we're different is the Jets game.
Gotcha.
Mike White's going to make his rise like a phoenix.
Maybe Joe Flacco gets hurt and Mike White comes in and saves the day. And hopefully you'll watch the Giant game. It's Monday night. We're not betting that game, but the Giants are getting 11.5 right now.
Wow, was that bad?
They're playing at Tampa, coming off their bye week. And Tampa had a horrible game. They lost to the Washington Redskins last week.
Yeah.
They're going to be pissed. They're going to want revenge.
Yeah, it's terrible. That's terrible for the Giants. They're going to be so mad.
Yeah.
That's a tough pick.
We're going to stay away from that one. But one of the things I was excited about, so when the Warriors played the Nets, the Warriors always seem to play really well in the third quarter. And you can bet the third quarter. You can bet who's going to win, right? So that's exciting too. Lots of opportunities. So, Doug, I think this was a great show to be together and share some kind of past, present investing advice about real estate and also sprinkle in kind of where we're going with the future and how commercial real estate, I think this will be a massive, massive change because you're going to have a whole new audience of people that want to buy commercial real estate, and that's going to drive the prices up. So I'm all about what's called the tokenization of real estate. I think that's one of the big future trends that we're going to stay on top of for you. And if you like the show, please give it a thumbs up and subscribe on YouTube, and feel free to reach out to us.
Absolutely. Right here, right
with our email address.
Get it with Garrett. I do want to say, Garrett,
yes,
a lot of useful information, and you are light years ahead of some of the people out there who, they're just they haven't even figured out social media yet, and they don't even know what's going to hit them when NFTs and the metaverse and all this new cryptocurrency. You need to start to focus because things are going to change real quick.
Well, great way to do that. It's free. Just follow me on any of the channels, whether it's LinkedIn, Garrett Graham is the Instagram, the YouTube. All this content is 100% free. This is something that I feel important about giving back. I always say the more you give, the more you get.
Absolutely.
And by the way, shout out to my friend Adam Koppelman from Speed Pro Imaging Services. He actually made a magnet for me. I sent you a pic, but I forgot to remind you of it. He made a magnet that says "Hope is not a business plan."
Ooh.
And I put it on my door, and I see it every day, and the kids see it.
That. I want one.
So Jessica's still working on the T-shirt. She's kind of busy with the holiday orders.
Yes.
But
I want one of those too. Sign me up for all the above. Love swag.
I may not get a chance to connect with you guys over the next few weeks with the holidays coming up and Thanksgiving. So I want to wish you a happy and healthy Thanksgiving. Of course, Doug and your family here, your fiance. And happy Hanukkah is coming up too. Very close Hanukkah and Thanksgiving this year. Yeah. And we'll probably take next week off for Thanksgiving, but we'll be back with a good lineup. I'm working on some really cool guests for early next year as well. Haven't even told you about.
Nice.
And thanks for getting up this morning with Garrett. Hope to see you guys soon. Let's play us out, Dougie.
Yeah, buddy.